market expert who's joining us on the show. Neeraj, hi, morning. Good to be speaking with you. Give us a sense of how you've read into the market's reaction yesterday in the closing hours to the kinds of comments that we were hearing coming in from overseas in terms of how the US and Iran are inching closer towards a peace deal. Talk to us about how you've looked at the way the market has reacted to it. A sharp spike on the back of that. How much do you still think the market is dependent on geopolitical cues in terms of our own reaction versus how much of the next leg up for the market will be driven from domestic factors like earnings?
Yeah, good morning. Yeah, yesterday definitely was a seesaw kind of a day. You saw market doing well, then it gave up all the gains, and then the news flow came in. I feel that in the shorter term, definitely this US-Iran deal is going to be very important for our market because a lot of positioning has been done in the market. Like yesterday, we saw that some bit of good news, market really reacted very positively. So there are positions I think made where people have been little cautious on stocks which are dependent on crude. In the near term, inflation concerns are there, whether it's domestic banking, autos, everything which is dependent on crude, real estate, auto machineries, real estate. So there have been some pressure there, and positions have been built on the negative there. I think if this deal is going to happen, then in the shorter term, there can be some short covering in those sectors, which can take the market up from these levels. We've been very close to 24,000. We've had 200-300 points above that. Below that, we've been languishing there only. But if the deal actually happens and crude starts correcting meaningfully, I think there's going to be some short covering happening in those sectors. Besides that, the earnings season so far has not been that bad. They've been a quite decent earnings season. Mid caps, small caps have also started contributing. I feel that there is a lot of value in the broader market still, even after the run up we've seen recently. So if you're going to get, because in the last few days, next 10 days, a lot of mid cap, small cap earnings will also come. So some FMCG earnings have also been very good. We saw Nestle coming out with good numbers. So domestically, earnings season is decent. And I think a lot of activity will pick up, post-election results now, which is related to domestic focus stock sectors, like, we can say water, infra, real estate, whether it's, railway, defense. And these are the sectors where all domestic focused companies should do well. So I think my outlook for the market will be pretty constructive. I think if the deal is happening in the shorter term, that will matter. But on the medium to long term also, we are well placed where a broader rally can play out in the markets.
That's quite interesting. So Neeraj, curious to know that after this 10% move that one has already seen at an index level, and of course, much more a meaningful move for small and mid caps. From these current levels, where is it that you see a bigger move happening? Would it be in this mid space or would it be large caps?
I feel it will be more into mid and small cap space where still there is valuation gap. Stocks have recovered from the bottom that this saw in March. But still, if you compare it to September, October 2024, still, people have not made that kind of return. They're still in losses as far as the broader portfolios are concerned. I think in that space, there is still a lot of opportunity. In the large cap also, in recently, because of inflation concerns, because of crude going up, there has been correction in even the financial sector, which was a darling of everyone just a couple of months back. And we saw last 2-3 weeks stock correcting there. There also I feel there is opportunity. So it's going to be more stock specific rather than sector specific from these levels because we've seen some rally already playing out. So one has to get into the right stocks and then play it.
Okay, so that's your strategy on how to navigate the market, and Neeraj believes that there is further potential of run-up in this mid-basket compared to the larger caps. So one sector that Neeraj mentioned was FMCG in terms of their earnings. While we're talking about that, just highlighting what the Godrej consumer numbers have looked like. Overall inline set of numbers coming in, but it was a miss on the profitability. Volumes look good. So while all of that looks good, something that the management said could be a concern for the street is we're going ahead, at least in the first half of FY27, they're expecting margin pressure. And they've said that on the back of all of this raw material inflation, margins could fall below that normative band of 24 to 26% that they've given. Kunal, give us a chart check on Godrej Consumer and how do you see the charts shaping up today? Because overall in line, management commentary slightly cautious and it's a miss coming in on the PAT. So what are the charts saying?
And that's exactly what has been happening to the stock price, because in 2024, the stock made a high of 1500 thereabouts. Very recently, the stock made a high of 1250. And now the stock is struggling to break past even about the 1100, 1150 barrier for itself. So which means consistently over the last many months, the stock has been making a pattern of lower highs and lower lows. So it doesn't come as a surprise that the stock, has seen some sort of a muted performance over here. But I would now believe that because the FMCG pack overall is getting into a revival phase, there could be a point where, if in case the selling pressure for Godrej consumers comes back into a bit on the sharper side, I think traders would probably try and take this as an advantage to maybe go for building up contra long positions. I would look at a major support around the 1000 mark for Godrej consumers for the stock price, and in case if the stock happens to fall back to that kind of a territory, that could be a good buying zone for short to medium term traders to try and enter into the stock price. On the higher side, 1150 is the breakout point for Godrej consumers. So I think the closer you are towards the 1000 mark, the better is the risk reward in case if the stock drops down.
How's other stocks looking, like Marico, Dabur, HUL?
So Marico and Nestle are the two strongest one from the entire FMCG pack. HUL is now coming back into a mild breakout. It's traded marginally above the 50-day moving average, coming closer to the 200-day moving average. Dabur has been a huge underperformer so far. I think at 460, 465 for Dabur, it's still almost 7-8% below the immediate resistance of 500 for itself. So when you rank the stocks on the basis of relative strength, Nestle, Britannia are the two strong ones. Marico is amongst top tier breakouts from the FMCG pack. Then comes in HUL, and then the likes of Dabur, etc. And then Godrej consumers probably in the last leg.
Okay, that's that on what's happening within the consumption end of the market. Yesterday, of course, it was really Coforge, which was the one which was actually the high flyer. Almost an 11% surge is what it saw after its earnings performance. That said, Neeraj, curious to know whether the mood on IT has changed at all?
Actually, generally the mood has not changed because even the outlook given by some of the top companies has not been that great for the next year. But I think there also in IT, it's quite stock specific. If you look at TCS, the numbers are not bad. Even their guidance is also decent. You saw stocks like OFSS, Oracle has done so well. So it's again stock specific. You can't generalize and buy stock because they've corrected. But if you generally see, stock specific action has been there in this sector. So one has like HCL Tech, for that matter, was doing so well till last quarter. But this quarter, the numbers, guidance were not good at all. So again, you can't really say the mood is changed, but definitely stock specific action will continue as far as IT is concerned.
Okay, on that note, let's take a very quick break. Let's just revisit what the GIFT Nifty is currently at, because much unlike our Asian counterparts, that's not showing you as much excitement. But yes, Kunal believes that one can safely ignore what the GIFT Nifty is up to, and we will have a positive start. Right now, it's absolutely flat. But yes, that level is already at the 24,400 mark. So that already is indicating a fair amount of upside for us. Quick break, be right back with more.
Back with the market, lots of sectors have been in focus, and in the last couple of weeks, we've seen a massive sector churn happening in the market because someday you have IT on the back of earnings or other triggers that have done really well. The rupee depreciation has also played out rather well for the IT sector. Then you've got something like a pharma on the back of multiple news that we've seen in the pharma space, be it Sun Pharma, be it Cohance, be it Lupin. Wockhardt earnings have been great. So pharma has also been a sector that's been in focus. But the one sector that has been shining really bright on a year-to-date basis has been the entire Nifty defense index. Neeraj, give us your sense on defense because an 18% jump on a year-to-date basis. What are you liking within the defense space at all? Is it the private side that you're liking? Do you like the public defense plays as of now? And where do you think this pack is headed in the near term?
See, as far as defense is concerned, I think that the spending on defense is going to increase. That is for given. Stocks have run up a lot, so valuations are not cheap. But it's for someone who has the patience to hold for 2 to 3 years, because a lot of these defense earnings, they happen over the period because they have long gestation period for the deliveries for the projects. So one has to be patient as far as defense is concerned. So among the defense space, I like companies like Musgot Dog. See, GRSC came out with a brilliant set of numbers. Even Musgot numbers were good. So Musgot Dog is one company where I feel they have a good order book. Execution has been good so far. So besides that, BML is also one company because that has a mix of defense and railways, where both I feel because of the metros, different towns and because of their defense orders, BML should continue doing well. Going ahead, they have a good order book. So if the execution picks up, which till now has been a little wanting, but I think looking at the order book, execution should pick up going ahead. So that is also one stock I like. I like more of the public sector companies there because they have been present for quite some time. And in the private space, companies have run up too fast and sometimes they're very small companies. So, the management quality also matters in the in those companies. But as far as good, larger public sector companies in defense, I think there one can make a investment and stay invested for 2 3 years. I think there should be decent return.
How do you look at real estate companies? If you look at realty index, I think 24% in last 1 month, or since April actually. It's one of the outperformers now, but for the last whole of last FY26, it was most muted sector as well.
I think what is happening in real estate is value buying. Because even if you look at companies like DLF, they had fallen so much in the last 1 year, they corrected so much. But then there is that, basic value in this company, their projects, their land banks, all those things are still there. So now also you're seeing a lot of projects being announced in Bombay. So NCR market has been a little slow lately, but, value buying is coming back there. So I think shorter term, maybe may not be that kind of return, but medium to long term, still there is so much scope in real estate companies. So I feel that one should be looking at adding them on dips because they had corrected a lot in the 1 year.
Lodha jumping nearly 39% since April. You have Prestige up 27% since April. Do you still see some room left in these stocks?
So again, I think that as far as the companies which are more focused in Bombay, we saw a good move happening recently. So I think there the move was more than what I would have expected. But companies focused in NCR, there the move has not been so significant. So there may be value in those companies because there I think things can pick up going ahead. And till now, you've not seen those kind of movement in the stocks also. So I think one has to be pretty stock specific there.
Okay, so that's the way to go when it comes to the realty index.
Research at Mirae Asset. Samil, how are you looking at some of the power stocks, energy stocks?
Good morning to everyone. The power stocks have been doing really well. We've been recommending power stocks for a little while now. NTPC, PFC, Power Grid, all of these stocks have broken out of huge consolidations, basing out patterns actually for 6 months, developing 6 months development, and those patterns have broken on the upside. Now they start making high tops, high bottom, the weekly charts, monthly charts on the high degree time frame. So my sense is that from here, the trend will continue in the medium to long term. We may see a little bit of pause, probably time-wise correction in the middle. However, I think these three stocks are looking really good from here. Even CG Power is looking great. It has just started in the very short term. CG Power has broken out of a small flag pattern in the very short term. I think it will give us a very good return. Stop loss can be 794, and the targets would be around 875. So CG Power would be my preferred pick in the very short term, but all of these stocks are looking great in the long term.
Neeraj, one sector which is looking very solid on the back of the numbers is NBFCs. What's your take on that?
I think NBFCs, again, in the shorter term, there can be some concern if inflation really goes up, if there is any interest rate, change which happen in the shorter to medium term. But, again, if you see some of these stocks, the kind of numbers they've delivered, even in spite of challenges which were there in the last couple of months, has been pretty good. Stocks like Shriram Finance have come out with a brilliant set of numbers. So I think stay with the solid, bigger NBFCs. I think they have the potential to go through these small variations which may happen in the shorter term. And I think stocks like Shriram Finance can be looked at as far as NBFCs are concerned.
Neeraj, it was a pleasure talking to you today. Thank you for joining us today.
Thank you so much.
Saumil, what's your take on some of the levels on some of the NBFCs like Shriram, Manappuram, Muthoot?
Yeah, at this point of time, Shriram Finance and Muthoot Finance both are looking great to me. But my preferred would be Muthoot. I'll give you levels on that. In the very short term, in the medium term, both the time frame is looking great. It has formed a small flag pattern on the daily charts, taking support at 20 and 40 daily moving average. We saw a good correction in the last couple of months, taking support at 200 daily exponential moving average. All the setup is looking great to me. Stop loss should be around 3,400 levels. My first target on Muthoot Finance would be around 3,680, and the next target would be 3,870. So these are the two targets I have for Muthoot Finance. But overall, I think Chola Finance, Shriram Finance, Muthoot Finance, all are looking good to me in the short to medium term.
And how are you looking at some of the cement stocks, especially Shri Cement, Ambuja ACC, and Ultratech?
See, my preferred pick would be Ultratech Cement. Ultratech Cement is looking great to me. Already been in a correction for a little while. Sharp corrections actually from 13,000 levels to 10,000, bounced back sharply. Now it's trading about 200 and 20-40 daily moving average. I would not suggest to trade in the very short term, but in the medium term to long term, the stock looks great to me. Stop loss for medium term would be 11,200. It's a little deeper, but I'll be expecting the stock to go above 13,000 levels in the medium term outlook.
Kunal, energy stocks, ONGC, Oil India, maybe a Power Grid.
So I think ONGC and All India, they would probably be under pressure. Of course, with crude oil prices ebbing off, there's bound to be a point where ONGC and All India can underperform most of the market. But I think the power stocks from that space, I would still believe the likes of NTPC, Tata Power, to a larger extent, look very strong. CG Power also, I think, is the other name, which also looks attractive at the current juncture. So that theme for the power stocks, that will still persist. Yes, these stocks may go into a mild correction. So what happens is, it's a usual sector churn which happens because energy was one of the first ones to move up higher in this last 4-5 weeks of the market rally so far. And then when you see other sectors trying to make a comeback, the excess amount of profit or the money which has been parked into this sector, that gets trimmed off, and you see that money getting parked into some other sectors. So I would probably believe that you might see some bit of profit booking over there, but it may not be a major trend reversal for the power stocks or the energy space at large. Yes, the likes of ONGC and Oil India, they could struggle a little bit at the current juncture. In fact, even Oil India in the last 4-5 days, it's corrected 10%, just on the basis of expectation that maybe crude oil prices will start to ebb off. So I think in that context, the power stocks is something which looks attractive from the energy basket.
Ramal, we saw a good broader market run up yesterday, small cap and mid cap. Is there any specific stocks that you're looking in that pack?
In the mid cap or in the small cap, I think one stock is looking really good to me. It is Amber. Amber overall, of course, a good breakout. Already making high tops, high bottom. Already in the uptrend in the medium term, long term, all of it. trading about 20-40 daily moving average, 200 daily moving average. Great setup. I think it will continue. My target for Amber would be at least 9,400, 9,500 levels. Uh, the base for the stock now becomes 20 daily moving average, which is a little deeper, 7,680. But that is the base. If you want to, keep a trailing stop loss, I think 8,100 would be a trailing stop loss for the stock.
And also, if you can give us a sense of some of the metal stocks, Vedanta after the demerger, does it look good on the charts for you?
See, Tata Steel definitely looks good to me. It has formed a triangle pattern, broken that triangle pattern on the upside. It's already on the up run. Looks good to me. Vedanta, on the other hand, it is already in the run up, and we've seen a sharp move from 222 to 316 already. So within a month, within one and a half month. So it's a sharp move. My view is positive in the short term, in the medium term, but I would not suggest to go in and buy at these levels. You can hold on to the stock. If you are wanting to hold on for a long term. Absolutely great stock to be in. You can hold on to the stock, even buy at these current levels, but not in the short term or medium term because it's already run up. It may come down till 290, 300 levels just to retrace the current rally or just a time-wise correction and then move up again.
Okay, energy, metals, that seems like the buoyant space. But by the way, the pre-open rates are settling in nicely. Even the big casualty from yesterday, L&T, is now jumped up about 1.25%. Look at the move on Bajaj Auto, has been going very strong into its earnings, and it's a solid 2.5% of a move up. I also want to check in on what Paytm as well as Policy Bazaar or PB Fintech are up to and how they are reacting to their numbers. A 3.5% of an uptick coming in on Paytm, and PB Fintech as well, higher by about almost 1% as we speak. So given that it's a livelier, broader market, let's get in some mid-cap strategies as well going. Kunal, what's on your list?
So I'll go with an auto name. Tata Motors PV, I think, is something which starts to look very attractive. The stock has recovered from those 340 levels to 355 plus where it traded yesterday. On the verge of a breakout, it's like a flag pattern completion on the daily charts for Tata Motors PV. So would suggest a buy with a target of 377. Stop loss could be kept at 340.
Right. Somil, what about your mid-cap ideas?
Yeah, I had Amber, but I have delivery as well. Delivery looks good to me. It is still forming this flag pattern or triangle pattern. It's been consolidating for last 3 or 4 weeks now. About 20 and 40 daily moving average. Good setup. Medium term still remains positive. Short term, I'll be expecting this consolidation to break on the upside. My targets would be 510, and my stop loss would be 455.
Okay, let's tell you what else has been making headlines in China.
We opened on a slightly positive note for the indices, but I think it's just the first few minutes of some profit booking. But I would believe that we should try and make a strong comeback on the indices. Global Asian market front is extremely strong. Crude oil prices have now cooled off closer to that $100 per barrel mark. So I think all of that should soothe the market, going forward. I think dips should be bought into in terms of intraday traders in index positions. From the opening trade, I would look at PSU banking names, and Canara Bank, I think, is something which starts to look a little bit more better, in terms of risk reward. The stock had 138.39. I would probably look out for a target of 148 for the stock in the near term.
Okay, Somil, any interesting trades that you're spotting on the screen?
See, at this point of time, insurance companies are looking good to me. HDFC Life, SBI Life, LIC Housing Finance, or LIC as well. So why HDFC definitely looks good to me. HDFC Life, it has broken out of a small ending diagonal pattern on yesterday, trading about 20 daily moving average. I'm preempting this because it is still trading below 40 daily moving average. The risk reward ratio is good here. The stop loss would be around 590, and I'll be expecting a target of around 650. And if it sustains above 650, then it would be 680. But I think insurance stocks have taken off, and I'll be expecting a good run up here.
Okay, Somil, we'll let you go on that note. Thanks as always for your time. Kunal, we'll see you again later in the day. It's really the broader market.